Alrighty, folks, in this video, we're going to be talking about candle confirmation again. But in this video, my focus is going to be in teaching you how to get the highest probability candle confirmation deals. And I'm going to give you a step-by-step framework to operate from within, okay? Also, before we do get into the video, if you want to learn more closely from myself, learn more about candle confirmation, this strategy, I invite you to join my free Discord chat. There's going to be a link to that in the video description. Okay. 100% free, and you can actually get access to my plays. I plug everything beforehand, before it happens, no hindsight. And there's a lot of value. Well, I mean, this is in the forks. This is in the different section, but I plug it in here as well. I plug different. So I got my charts plugged in the analysis section here every single day. And there's a lot of value in following along daily with this stuff. Seeing my thought process real time, because I don't do none of this hindsight crap. You don't see me going in like a lot of people in this industry. They'll go on social media and try to flaunt their big P&Ls, but they don't plug anything beforehand. They don't call anything beforehand. It's just flexing on people. I want you guys to eat with me. That's not me saying, oh, come follow alerts. This ain't an alert chat. I plug this stuff in my chat, not for you to blindly follow me, because you'll lose money if you blindly follow. I do this so you can learn my thought process. I do this so you can start to see the same things that I see. And when you follow on a consistent basis what I plug in here, you're going to start to think like me. You're going to start to develop that understanding with time, but it doesn't happen overnight. Okay. So I invite you to join that, because you're going to learn more about candle confirmation the more you follow along with me. It doesn't cost you anything. 100% free, and there's a link in the video description. Now back to the video. So here's what you need to understand about candle confirmation. Most of you understand like the fake out breakout strategy, or like the fake market structure shift strategy. That's what most people know candle confirmation as, what they're learning it at. And it's a strategy that I have developed based around candle confirmation. But there are different elements to candle confirmation, and that's what I'm going to be going over in this video. I'm going to be going over the fake out breakout strategy and how you can make that higher probability, the highest probability deals. But I'm also going to show you how you can utilize candle confirmation to form a bias, to understand where the real shift is going to occur. Now I'm telling you, candle confirmation, folks, it's a fucking game changer. Excuse my language, but it's a fucking game changer. All right. I'm not tooting it. It's like some holy grail, because it's not a holy grail, but I'm telling you, it opens up another world of understanding once you really grasp it. Okay. We're going to go over USD JPY, this example here. Okay. Again, plugged in chat, real time. I'm not just going in hindsight or market replay. I am in market replay, but that's why I'm saying, like, I called it beforehand. Just gotta make that clear, right? But as I was saying, we have a fake out breakout deal here. I'm gonna talk about this setup. Step number one with the fake out breakout strategy around candle confirmation is you want to see this thing in the downswing, which we have right here. You see all prices in that downswing, it's curling lower here. Look at my cursor, follow my cursor. I'll try to go very slow, because I know some people have made the comments that I talk too fast. So I'm going to try to go slow with this. All right. So I want to make sure everybody at the end of this video, everybody, they know this shit like the back of their hand. All right. And I'm going to give you a framework here. Okay. Right there. As I talked about in the first video with candle confirmation, you want to see conviction. You want to see strength. Okay. You want to see it if it's a bearish scenario, and you'll just reverse this for bullish scenarios. But in a bearish scenario, you want to see that strong close first things first. We get a strong close right there. Strong close beneath that previous low right there. You see that? So what that tells us in simplest terms is it did not, I repeat, it did not respect the liquidity beneath this low. It's still in that downswing, very weak, very bearish. A lot of conviction, a lot of strength. So what we're going to do next is, after you see that displacement beneath a previous low like this, okay, you're going to note that low and go to the lower time frame, because that's going to be your PT, of course. That's going to be your target. You see that right there? You already know right away that's true. And now we get into 5 o'clock. Here's 5 o'clock. I'm on a 5-minute now. But remember, that was a 4-hour candle that we were just looking at right there. And that 4-hour candle closes into 5 o'clock. So now where my cursor is pointing on this 5-minute, we're coming into a new 4-hour candle. What do you want to see next? You want to see a push up, because this is what we call the fake shift. This is what we call the fake market structure shift. You want to see a push up, and you want to see price take 5-minute buy side liquidity, which it does right here. 5-minute buy side liquidity is taken right there. See how it comes up above it? So it looks like a market structure shift, but it's not. But it's not. We understand because of everything I'm about to tell you here. We've already established that we got the strong close right there, a lot of conviction, a lot of strength, right? And we understand that that's going to be our target right there, that low where my cursor is pointing. We got the liquidity taken, but there's something else you got to do. This is very important for your highest quality deals. Whenever you're looking for your shift, folks, pay close attention. Whenever you're looking for your shifts, wait for the candle that it displaced beneath, the low of that candle to be tested. So for example, this candle displaced beneath this previous low right here. I know somebody's going to see like this, because this will be a question that I get. But you got to swing low right there. Didn't you just say like it needs to be in a downswing? The thing about this is it's been in that downswing. Like you see I put in that swing high right here, highs on the middle, lower high on the left, lower high on the right. It's in that downswing stacking right here. Had that strong close previously. So it did have a little curl up right here, but at the same time, there's no conviction there. You see how like that came up right there, clean out that previous high, and it respected that liquidity right there. It would still be ideal if it was, didn't have that happen. I still like it to just be in that downswing completely. But because I have that respecting that previous high, I don't really put a lot of significance on that thing having that leg up. So I just wanted to touch upon that very quickly there, because I know there's going to be somebody that, that asks that question. So just so I can eliminate that. But as I was saying though, you get that really strong close right here beneath this low. Look at my cursor right there. It displaces beneath that low right there. It doesn't respect it, which we've established. So when you're looking for your, shift, that 1-minute shift that I talked about in the first video, and if you haven't seen that first video, there'll be a link to that in the video description as well. You need to watch that too. But you want to see a push up into this old low right here. And don't start hunting for the shift, the lower time frame shift, until that low has been tested in a bearish scenario. Of course, you would just reverse for a bullish scenario. But it would be like the previous high in a bullish scenario, of course. But you have the previous low right here that it's coming up and it's testing. You still want to see the liquidity sweep, but you want to see that old low tested as well. And remember, when it's doing all this, you also want to see it leave that low intact of that candle. Remember, this opened up at 5 o'clock, and you remember how that pushed up here first things first while leaving that intact? That's very important, because the liquidity is what gives it validity. You need that magnet. You need that draw. So we've established that. You want to see that push up into that new candle, because that's, think power of 3. That's going to be your manipulation run to the upside, what we call the fake shift. Okay. It's coming up. It runs off this buy side, and you see, like now you see it on the 5-minute chart that's displayed, like this horizontal blue line where my cursor's moving. That was the old low level that I was just telling you about on the 4-hour chart. So now, not only are you taking out that 5-minute buy side, but you're testing that old low level. You have that strong close, and now you can begin to look for your 1-minute bearish shift. Now, there's one more thing here though, folks. This is very important too. If you want the highest probability deals, whenever you are looking for a short play, make sure Asian session highs buy side liquidity has been taken out. Now, when I did my initial test on this, I did just fine without the Asian session highs taken, Asian session lows taken. But I'm telling you, if you want the highest probability deal, if you just want to be waiting for the best deals, just to kind of simplify it for you, wait for Asian session highs to be taken. It was taken right here. So Asian session, which you need to understand, Asian session begins at 19. Which is 7 o'clock p.m. Eastern time, New York time. And it's like right here. And then it ends at midnight. So you have Asian session highs. It was right here, by the way. And then it takes out that level right there on that sweep. It cleans it out. So it cleans out Asian session highs right there. So that liquidity is done with. Why is this important? Because in simplest terms, folks, if that liquidity has been taken, it can't serve as a draw. Now, yes, there will be cases where you'll have something else up above that serves as that draw, but that's just a very simple way, because right away that ain't going to serve as a draw. Right away that liquidity has been taken. It can't gravitate to that because it's swept it. And now we combine this with these other factors. The fact that I have that strong close on that higher time frame right there, that 4 hour. I'm using the 4 hour, but you guys get the deal. You can utilize this same signature that I'm teaching you here on the 1 hour too. Okay, it's the same process. But you get that strong close. You have that liquidity sweep right there, folks. You have that old low level that it displaced beneath. What does price do next? It has that fake shift. Now look how you can connect this to stuff that I've already taught you previously about premium and discount. If you were to take the Asian session highs buy side, I mean the not Asian session highs buy side, the hive day that swept it, and drag it. Whenever price comes up into a premium, meaning above 50% of a price range that has a significant liquidity run like that, those ranges are typically respected immensely, considering you have a drawdown below, which you do. We've already established where is that at, the strong close. See, you have a drawdown below, and then whenever you have that clear drawdown below and then price moves up above 50% equilibrium of a range that's had a significant liquidity run right there, it's expensive. It's in an expensive marketplace. And not only is it an expensive marketplace, but it's also testing that old low level right there. I just talked about on the 4 hour chart. It's taking out 5 minute buy side. And then but remember, there's also that time element, because this thing pushed up first things first in that candle while leaving this intact. So we understand, think power of 3, that's going to be a manipulation run. And you see how all of that right there that I just gave you gives you a full, complete picture of what's happening here. So some of you have had issues with like timing and stuff, like timing the shifts, like you getting it wrong and your time is a bit off, right? Or that's the main issue that I've seen with people coming to me. I gave it right there. That solves the issue right away. I gave it to you. The thing is though, and this is where a lot of you are going to be facing some issues. And before I get into this, psychology lesson, that's what I was about to gravitate to, but I want to finish up this first. After you get that sweep on the 5 minute and you got this thing up on a premium, that's the old low level right there, which we've already established. Then you want to look for your 1 minute bearish shift. So with the shift, you want to see the fair value gap and you want to see the strong close beneath a short-term low. So you have these short-term lows in here. Like you swing low, low slow in the middle, high on the left, high on the right. Look for your swing low, look for a strong close, look for a fair value gap. Once you get that, it's confirmed for a bearish scenario. And then you can hop in and then you could target the low down below where my cursor's pointing. And for your stop, you would just have a 1-to-1 stop on it. That's how I do it. Okay. It's a good idea to give it wiggle room. Like just for example, boom, right there, you got short. You risk that right, or you're targeting that right there, and then you slap a 1-to-1 on it just to give it, like, to allow for imperfection to do its thing to work. You see? And there's also a 10 pip rule. I use a 10 pip rule, meaning I don't do anything less than 10 pips for PT, and then that translates over into the stop. Now, I didn't say there's a strict 10 pip stop, because there's not. I operate with a 1-to-1, meaning, like, say, for example, your PT's 20 pips. Then your stop would be 20 pips too. There's not a strict, and that's something I see people get tripped up on as well, is they'll do the 10 pip stop. It's not always a 10 pip stop. If it's a bigger mover and you got like 20 pips or 30 pips, you would just do the 20 to 30 pip stop with the 1-to-1. So that's what you would look for. You look for your shift and then you run out that low. I gave you very specific criteria there, folks. I don't know how I can be any more clear. I don't know how I can. It's very simple stuff. That fake out breakout strategy, Asian session highs taken. You want the strong close. You want that downswing. You want the 5 minute buy side taken. You want that old low to be tested if it's a bearish scenario, of course. Flip it around for a bullish scenario. You want that shift. Run out the low, 1-to-1 10 pip roll. I just gave you a full strategy right there on a fucking platter. A better strategy than basically just about everything out there. All right, I'm not gonna. I don't want to tote, I try not to toot this as like a holy grail because it's not. I don't even want to bring that across because even this strategy, it has losing streaks, it has drawdowns. And I demonstrated, like I had a little slow period recently, kind of back and forth. And I'm sure, whenever, I know when that happens, people are going to fall off, right? That happens with any strategy. So just understand that. I really try to remind you guys that often because I'm not going to be this guy that's telling you, oh, this is, the holy grail 100% win rate. It doesn't have any type of, losing streak, no type of drawdown, nothing like that. I can't do it because I know that's not real. It's not with any strategy, but it works good. It's a great strategy. It's a working strategy. It's an edge. And there isn't many edges in the marketplace, really. Everybody talks about how, everything's an edge, or, all strategies work. No, they don't. Most stuff out there, most stuff on YouTube is complete garbage. It's complete garbage. And, I see all these folks, toting this, these huge risk reward type of strategies like 10 to 1, 20 to 1. And it's just for 99% of the traders, that's not going to, big risk reward stuff like that doesn't fit most traders. So, for those of you, and I say that because for those of you that are new to like my type of content, because I know I have a lot of you that have been finding me lately through my candle confirmation stuff, don't count out 1 to 1. All right. I got rich off 1 to 1. 1 to 1 built my career. And a lot of people don't do it, but also a lot of people ain't profitable. Everybody says, oh, you need at least 2 to 1, or you need these big winners. And well, most people ain't profitable. Not saying you can't be profitable with a 2 to 1 risk reward, by the way. You can, but I'm saying my point is, if you want unconventional results, you do unconventional things. You go against the crowd. But I want to go over some other stuff before I go too much, because I've already went on a little bit of a tangent with my psychology lesson, etc., and all that stuff. So we're gonna reel it back in. I want to go over something else, okay? But that's really clear rules, folks. I gave you really clear rules right there to abide by. Use it, implement it. Because I told you a second ago about how like candle confirmation, it's not just like the fake out breakout strategy. All right, that's one strategy. But I'm gonna go over something else as well. Candle confirmation can also allow you to form a bias. It can allow you to form, a full game plan here. So I'm going to use this AUDUSD because I had a short deal on this. Again, I'm not just going in hindsight. I did plug this in the chat in the free Discord. I called it on mic with my mentees. We were talking about this entire game plan before it happened. Why, everything did what it did. So candle confirmation, we have this daily chart. This came up right here, and you see how it cleaned out the high of that candle Tuesday. You need to understand that there is liquidity above and below each candle. Each of these candles has liquidity residing above and below. There's also, as you can clearly see right there, a fair value gap that it comes up into. That's resistance. You can also see how this thing is in a downswing currently, meaning it put in that swing point, and day after day here, it's stacking, tagging out, low after low after low. And then what we see here on Wednesday is this thing comes up and we clean out that high, we press up that imbalance, but it fails to displace. What does that tell you? It goes back to the old saying, the wicks do the damage and the body tells the story. The wicks do the damage, the body tells the story. So what this says is it fails to displace. This failed to displace above that high in a downswing. This came up into an imbalance. It failed to displace. It rejected. It rejected. You're not predicting anything. Price is telling you right there when it comes up into a key level like that. Okay, it's telling you that it doesn't want to move higher on the daily chart. Now, really think about what I'm telling you. All right, kind of use your head here, and then you can see how you can connect this to other time frames. And that's what I want you to do here. I want you to actually put in use some elbow grease and actually think about what I'm telling you and go into your charts and study it in different time frames, and it'll connect. Okay. The problem is, some people want me to spoon feed them. Think about what I'm telling you. It's in a downswing, the bearish momentum. We take out the high of that candle. We come up to that imbalance right there and it respects it. That's a bearish signature, folks. That's bearish. Now what I want you to do is I want you to go to a lower time frame. Remember that storyline. Because, what price is telling you in simplest terms is it doesn't want to move higher. It's being met with resistance right now. Here's the thing, folks. I had this AUDUSD that we just talked about, and you see that now I'm on a 15-minute here, but you see how this thing came up here into that imbalance. It's on a 15-minute, but that was that daily imbalance. You see how it pressed up right there, and it rejected and it sold off. Remember, we had that failure to displace. Okay, it had a failure to displace, meaning it's weak. And what happened was, look what happened right here. Follow my cursor. What did price do right here? Price created liquidity. What liquidity? Asian session lows. So Asian session begins at 19 and then it ends at midnight. Begins at 19, ends at midnight. So that right there where my cursor is pointing is Asian session low sell side. Remember what I told you on the higher time frame? It already had a clear rejection. It didn't want to displace. It respected the previous daily high and that imbalance, and it closed weak. It closes weak, and then what happens here is we have Asian session lows right here. And what does price do first things first? It pushes up. Into what? Where does Asian session begin again? Remember what I told you? At 19 ends at midnight. Look how it look what it presses out right after midnight into London. Really pay close attention. You're cleaning out Asian session highs, buys of liquidity, while having, this is the key thing, while having Asian session lows intact down below. Right there, folks. Right there. If that liquidity is there, it is able to serve as a draw. If that liquidity is taken, it can't. And what you need to understand is price is going to move in the direction of least resistance. So we already have that taken, that liquidity taken. You already have the daily telling you that it does not want to move higher right now. It needs more fuel because it had that clear rejection off the imbalance in that previous daily level. So does it really make sense? Really think about what I'm telling you here and sit with it. Watch this a few times. Does it really make sense for this thing to press up here? Because it's looking bullish in the moment. It's looking very strong. It's pushing up here. Does it really make sense for this to come up to take out this high if you still have Asian session lows intact? You have that significant bias of liquidity taken because Asian session highs is a big level. And you already have the daily telling you that it doesn't want to move higher until it has more fuel. And I say fuel to simplify. It's liquidity. Think of liquidity like the fuel for price. Like think of it like a car. You want to reach a certain destination, but you're running on empty. 80 USD is the car right now. It's running. Look, follow my cursor. It's running. It's pushing up. It's got a destination. But oh, look at the meter. We're almost on empty, folks. We can't make the trip up there. We need to stop at the gas station to get some gas. All right. Gas is right there. Liquidity, Asian session lows. We got to make a trip. Goes down, right? Because that was manipulation. That push up was manipulation. When you're having a push up like that, it's going to create liquidity because it's looking strong. But because we understand what that daily did and how it had that big rejection, that weak close, and then we understand how we have this liquidity still down here residing beneath, which is Asian session lows. And then we understand that we already have the Asian session highs buy side. That buy side liquidity is giving it the fuel it needs to make the trip down into this low. This is where we go in off that liquidity, and then we frame our market structure shift. So what I'm doing here, folks, and for some of you, this is going to be like, a lot of info right at one time. That's why I told you, listen to it several times and go into your chart and study it. And you're going to have it's going to be a light bulb moment when I'm giving you right here. I'm not going to spoon feed you. I want you to study this and I want you to watch it several times because I'm giving you gold right here. Because then this is what framed this short setup that I had on this particular day, because I understood this reality of, okay, we got this liquidity taken, we got this down below, we have the daily storyline, and then this liquidity is going to frame that shift, because for a high probability market structure shift, you need a significant liquidity run, and you need a clear opposing draw. We have both. We have a significant liquidity run, and we have a clear opposing draw. So I had this displacement right here, which is what I plugged, but if you remember what I plugged in chat and in the free Discord, was I need a turtle soup entry on this. So meaning I'm not going to risk this high because of 10 pip rule. So I get this this is after it ran out Asian session highs buy side right here. Look at my cursor. We get that push up, ran out Asian session highs buy side. I get my fair value gap. I get my strong close beneath that short-term low. At that point, that's my trigger. I'm interested in a short play on this. For everything that I just told you that framed that, I want to target. Well, actually, I ended up targeting this. This is like a low-hanging objective target for me, but you could have targeted this as well. But I did end up targeting that right there. But yeah, so what I did was I got a turtle soup entry, meaning I entered as it was breaking out here. And then I ended up taking it down to that low down there. Or my mistake, this low right here. As I was saying, you could have shot for this too. And you know I got to come with the receipts. 80 USD, 5-minute shift in process. Look for it around the equal lows. 10 pip rule, which is what I just told you, what we just went over a second ago, says need turtle soup entry. All right, this is what we do, folks. This is what we do. I'm not one of these market replay folks. I'm not right all the time. I take L's. I'm not claiming I'm just some person that's never incorrect, that's right on everything. I have losing streaks. I have drawdowns at times, but I show it to you. All right, I don't hide this shit. I don't hide none of my stuff. I post this shit before it happens. Okay, so you can learn. I just kind of wanted to throw in that nugget because candle confirmation is not just like the fake out breakout strategy. That's what most of you gravitate to, and that's great. That's a great strategy, and that's what most of you are learning candle confirmation through. So a lot of you are probably more interested in the first scenario that I gave, because I gave you like really clear rules with that first scenario, that first thing that we talked about. So for those of you that like the fake out breakout strategy, that's what you want to do. Utilize the rules that I gave you there, and you're golden. The thing is, what comes with like higher quality deals though, and utilizing those signatures, and this is where a lot of folks are going to run into trouble, is it requires patience. You'll still get consistent setups week in, week out, but it does, you know, you're not getting one thing after another, which is what a lot of people want. Is that, you know, they want to be trading constantly 24/7. You'll still get plenty of setups, but you got to exercise a little patience. And if you don't got that patience, well, trading just ain't for you, period. Okay? That's where a lot of people are going to go off track. That, and, you know, when they're hit with some type of losing streak or drawdown, then like that holy grail lens that they're looking at the strategy through, it dies out, and then they go to something else, and they go to something else. Those folks will never be profitable. So just understand that. Okay, I'm making sure you have the proper expectations that you're approaching this with. Candle confirmation can make you rich. Candle confirmation can turn you into a full-time trader. Candle confirmation is the fucking way. All right, but it's not a holy grail. If you did enjoy this video, make sure you leave a like, you subscribe to the channel, free Discord in the link, free Discord in the video description below.